Good morning, I'm James Lopez, President at HomeFi Corporation, and this is today's mortgage and real estate market update. Straight into the bond and treasury market this morning, mortgage bonds are down about 20 basis points at the time of recording. The 10-year yield is up about 6 basis points at the time of recording. And the centerpiece for news today is going to be a panel discussion with the IMF, that's the International Monetary Fund. And two of the key speakers on the panel are going to be Fed Chair Powell and the ECB Chairman, President Lagarde. So the things that they say as part of this discussion are going to be closely watched and could move some of the market. So we'll keep an eye on that throughout the day. And what that means for mortgage rates this morning is that mortgage rates are most likely going to open up either at the same as where they closed yesterday or maybe a little bit higher in anticipation of some of the comments out of the IMF panel. And we did reprice for the better yesterday towards the end of the day. So we could see those mortgage rates lift back up just a little bit as we open. We could be in reprice territory depending on news of the day. There's also some other news that's coming out today, jobless claims and things like that, that could have some market moving effect. So we'll keep an eye on that stuff as it happens. Now, speaking of rates, the MBA, digging into that MBA data that was released yesterday, MBA released that the previous week ending in 4/15, the fixed rate, 30-year fixed rate rose to about 5.2%. And this is the highest basically that it's been in about 10 years, 1 decade. And it's about 2% higher than where we were last year. Now, this again explains, the application data as far as refinances goes, explains why that's down 68% year over year. Makes sense, right? Not a lot of rate and term refis going on like there were last year when rates were in the upper twos. So that's kind of what's going on. But jumping in and tying that data back over to the National Association of Realtors data that was released, and this is some interesting data that we've seen out of that report. First-time home buyers made a nice move in the month of March, up to 30%, accounted for 30% of all of the transactions in the month of March. That's up from 29% in the previous report and up from 27% in the previous report 2 months ago, the report before that. So first-time home buyers are still a strong part of the market, and that's good news, especially with the talk of affordability and everything with home values higher and mortgage interest rates higher. The talk of, or seeing the fact that first-time home buyers are still in the market and they're still wanting to purchase homes is a good news and a nice move for the real estate market. Now, cash buyers increased from 25% to 28%, and investors decreased from 18% or 19% to 18%. So investors are buying, made up fewer amount, 1% less of the purchases in the month of March. And then lastly, foreclosures made up less than 1% of all of the transactions. So foreclosures and short sales made up less than 1% of all of the transactions during the month of March. Now, speaking of foreclosures, and we're talking about loan health now and the healthiness of loans across America right now, CoreLogic released their data about loan health yesterday as well. Now, loans showing that they're past due 30 days decreased by 0.1% to 3.3%. And then loans showing that they're seriously delinquent decreased by 0.1% as well, down to 1.8%. Now, loans that are in foreclosure are still under 0.2%, and that's still a multi-decade low. That one is a multi-decade low. So great news for loan health in general, and a lot of that is being supported, and the reason for that is it's support from the appreciation that we've seen over the past year. So those home values and appreciation has really helped prop up the housing market, and that's some of the stuff that we've talked about, and it shows in the loan health data as well. And the reason why is because once you start to see, and everybody kind of remembers, once you start to see a lot of foreclosures beginning to happen and things like that, then that's really when you start to see home values not just slow down in appreciation but start to drop, because you have homes that are for sale that REO or just bank owner just trying to offload, so that's when you really see home values decrease. And so the fact that there's great loan health right now, and because of the appreciation, is really good and supportive of what we see as a strong housing market. Tying back into everything that we've been saying for the past couple of weeks, we don't see a bubble per se. What we see is the deceleration of appreciation in the coming months, and a lot of that is supported by appreciation and home values. So we see the housing market as strong. Are there fewer purchases? Yes, because there's much less inventory. But as the season comes on, we have seen more inventory come on, and that's cyclical. It's just part of the season. So as we continue to see more inventory come on, we should continue to see more transactions happening in the coming months. All right, that's all the news that we've got for today. I hope you have a wonderful day, and we will see you tomorrow.